Good morning, my fellow investors. I've got my morning espresso. Let's get into my top dividend stocks because that is something that I'm very passionate about. So stick around. Good morning, guys. Hope you're all doing well out there. I've got my morning espresso here. I've almost finished it. It's an awesome day because it's Friday. And every day is a great day with dividend investing, guys. I will say that. Just a quick one. Thank you so much to every single one of you who have subscribed to the channel. This has literally exploded. I couldn't have done it without all of you guys and all of your comments and all of your likes. Thank you so much. If you're new to the channel, guys, make sure you like the video and subscribe because I love sharing my investing journey with every single one of you because potentially you guys can learn something from me that you may not have known about any kind of these investments like crypto, growth investing or dividend stocks. And guys, as mentioned, I'm not a financial advisor. I do this for pure fun and to document my journey in investing. So whatever you're doing, make sure you do your own research and due diligence. And make sure you're very careful with what you do with investments, guys. All right, so today's video is going to be about dividend investing. And for those of you who've come from the crypto world, dividends have been something that I've been investing in for a couple of years now, almost 3 years this year. So it's taken a long time to build up to this amount that you guys see on the screen now. It hasn't been easy because it requires a lot of patience and discipline. Because when you're investing in dividend stocks, you're slowly growing every single time you make an investment into a company. Now, obviously, with regards to dividends, that is essentially, how can I say, a reward from a company holding the stock. And when you're buying a stock in a company, you're essentially buying that company and you own a portion of that company. Even if it's one stock, you still own a very tiny piece of like whatever company you're investing in, like Disney or Exxon Mobil or AGNC and stuff like that. So just before I get into it, guys, I'll go into what the definition of a dividend is because a lot of younger guys don't know, and girls, sorry, they don't know what a dividend stock or investing strategy is. So a dividend refers to a reward, cash or otherwise, that a company gives to its shareholders. Dividends can be issued in various forms such as a cash payment, stocks or any other form. A company's dividend is decided by its board of directors, meaning the the people that run the company, and it requires the shareholders' approval because whatever a company does, it requires shareholder approval. So when you buy into a company like through stocks, you get the right to vote on whatever the company does in future. So everyone has the opportunity to provide their opinion and their vote when you get the little email for that. And however, it's not obligatory for the company to pay a dividend. So basically, they don't have to pay their shareholders a dividend. It's basically on the company whether or not they decide to do that or use those profits to reinvest into the company. Dividends are usually part of the profit that the company shares with its shareholders. So the company doesn't necessarily have to pay a dividend. They do it because they want to reward their shareholders for investing their money into the company. So that's basically what it is. And guys, I'm going to go through my top dividend stocks. So I'll go through this and I'll use my, let me close this here. I'll go to my dividend tracking app, guys, just so you guys can see this. And this is a fantastic app. I'll get into this later. But we'll go to my top dividend pays, guys. Exxon Mobil. So Exxon Mobil pays me a dividend every single year of $278.08. And with Exxon Mobil, guys, let's just go into here. We'll go down to Exxon Mobil. And they are obviously, everyone knows, an oil company. So they deal in the oil industry, so fossil fuels and stuff like that. I hold 62 shares of Exxon Mobil, $3,600 USD in equity, and they pay a dividend yield of 5.99%, which is a good range. I tend to go for dividend yields of around 3 to 5%. Some people like to go with a lower dividend yield, like for example, if you were to invest in like Apple, they pay a very low dividend to their shareholders, and that's purely because they like to reinvest their profits into the technology of the company, so therefore they can grow their technology and basically, build their company up. That's why people pay less of a dividend. So ExxonMobil, guys, is the oil company. SPHD. Now, SPHD is an ETF, guys. This is like the S&P 500 index fund, which tracks the top 50 companies in the S&P 500, which is virtually the biggest companies in the United States. This is an ETF, so it's like when you're investing into SPHD, you're spreading and diversifying your money across all those 500 companies, but this particular fund, an index fund, only tracks the top 50 dividend paying stocks. I've got 56 shares of SPHD, $2,500 in USD in equity, and it's got a good dividend yield of 4%. And guys, just a quick one, some dividend companies actually pay monthly, like SPHD is a monthly dividend payer. So at the end of every month on the, I believe it's the 30th, they pay their dividend, and this comes every single month, which is insane. Some companies pay quarterly, which is 4 times a year. So it could be like, split up across the year. It could be like March, then it'll be an actual fact. I'll go to my chart so you guys can see this. Let's have a look here. SPHD, where are you? Monthly income here. So for example, here, guys, it could be, like April, then it can go May, June is usually March to June, September, and then December would be a like for an example of a quarterly dividend payer. And then obviously with SPHD, they pay every single month, guys. So, I mean, this is something to consider if you're looking for that regular source of income. So they pay me $110 a year, which is awesome. Prospect Capital, guys, is a risky stock. Their dividend yield hasn't increased. Their dividend hasn't increased for quite some time. And we'll go to PSEC, guys. They're sitting at $8.17 a share. These are a monthly payer as well, guys. Another monthly payer. I'm sitting at 104 shares, 854 USD in equity, and they pay an 8.8% dividend yield. This is on the high side. Now, when a dividend yield is very high, that means that a company obviously can't maintain that dividend because it's just too high for them. They're putting too much of the profits back to the shareholders rather than building their own business up. And with Prospect Capital, that is the case. And when that happens, guys, a company can actually cut their dividend, and therefore you no longer receive any of those dividends or payments, cash payments from that company until they can establish what's going on with their profits. So that can happen, and that is a risk factor in with investing in dividend stocks. So let's go to my next one, guys, is Realty. Now, Realty is another monthly dividend payer, guys. This is a REIT. Now, what a REIT is a real estate investment trust. So basically, when you're investing into Realty, you're buying real estate without having to actually own it. You're buying into the company that owns it and that manages rental properties, like fixing a broken tap or broken window, door, whatever it may be, air conditioner, heater. They go and look after everything, and you just collect the profits from the rent that these guys collect as well. So Realty is a monthly dividend payer, really popular amongst dividend investors. I've got $1,500 US in equity. I've had a 15% return on that, which is awesome. And their dividend yield is 4.11%, guys, which is really, really cool. And you got some analyst rating here, 50% recommend buying, but obviously do your research with this, guys. But a really cool option if you can't afford to buy a property like, at a young age, maybe start investing in REITs, because with real estate investments, guys, obviously over time, property is always the best form of investment because it always goes up in value. That has been literally the only solid investment over time and over many, many years that real estate goes up in value. And I'm not sure where my chart's going there, but you can see on the 3-year chart if it wants to load. It's having a moment. The year one works, so you can see there it goes up. So look, a REIT is a good investment as well. So do your research into Realty. Make sure you guys do your research with everything that I'm doing here. EPD is another one, guys. This is a quarterly dividend payer. And where are we here? EPD, I've got 33 shares in EPD. And you can see here, Enterprise Products Partners is a provider of midstream energy services to producers and consumers of natural gas and gas liquids, crude oil, petrochemicals, and refined products in North America. So these guys are again in the fossil fuel sector. Another dividend payer. They pay me $77.76 a year. Realty pays me $80, by the way, a year, which is awesome. AT&T, if you're in the US, you know who they are. They're a huge telecommunications company, and they also own HBO Max, I believe, which is a really cool streaming service. And if you go here, guys, I have 22 shares of AT&T, $716 USD in equity, 6.72% dividend yield. So it is on the high side, but again, these guys own obviously some other businesses, and they are diversified with their business with HBO. And obviously there's a lot of things coming out now with 5G and cell phones and internet and stuff like that, which they run as well. So look, guys, I like AT&T, and I think they're a good dividend payer, but the dividend yield is 6.72%, which is getting on the high side now. So anything, as I said, between 3 and 5 is my sort of range and goal. And they pay me $60.93 a year. VYM is another index fund. This is a huge index fund, guys, and it's mainly focused on high dividend yielding companies. The Vanguard is a huge firm investment company, guys. These are the biggest. This is the biggest company that you can invest in. Vanguard is huge. Look them up, guys. Do your research on this. This is an awesome one as well. I've got 15 shares of VYM. It is quite expensive, $104 a share. But when you're buying this, guys, you're buying the S&P 500. So all the top 500 companies in the S&P 500 index, you're buying a portion of those companies by investing into VYM. And the dividend yield is 2.91%. which is really good, guys. And the more you increase this, the more you're obviously investing into the S&P 500. So a really good option for dividends. They pay me $52 a year. AGNC, guys, is an investment in the financial sector. So we'll go here. We'll just scroll up, guys, so you can see what I've got here, AGNC. There's a lot of people that are risky with AGNC, guys, but I've invested in them because they're a monthly dividend payer as well. I've got 12 shares of them and sitting at $229 USD in equity. They have an 8% dividend yield, which is extremely high. And you can see here, AGNC Investment Corp, formerly American Capital Agency Corp, is a real estate investment trust. The company invests in agency residential mortgage-backed securities and on a leveraged basis. Its investments consist of residential mortgage pass-through securities and collateralized mortgage obligations for which the principal and interest payments are guaranteed by the government-sponsored enterprise such as the Fed National Mortgage Association or by the United States government agency. So have a look at AGNC. A monthly dividend payer, guys, but it is risky because of that high dividend yield, and they pay me $23 a year, and this pays every single month. And by that I mean it pays a portion of my investment every single month, guys. So Stag is another one, guys, at $18. This is an industrial REIT. This is another monthly dividend payer as well. And with obviously everyone in COVID at the moment, and a lot of businesses are needing warehousing to operate their businesses from, so that's the reason why I like Stag, because they're mainly warehouse, industrial sort of side of things for real estate, so a lot of warehousing, factories, that kind of thing. And I own 10 shares of Stag, and equity is sitting at $367 USD, and they've got a 4% dividend yield as well, guys. If you go here, Stag Industrial is a real estate investment trust. The company focused on the acquisition of ownership and the operation of single-tenant industrial properties across the United States. So really cool one, guys, a monthly dividend payer. Check that out. And Philip Morris is another one, guys. These are tobacco. They obviously produce a lot of tobacco products, and these guys actually pay a very, very big dividend, but obviously, with whether or not people want to invest in tobacco, it's completely up to them. How many shares have I got in them? I've got 2.9 shares of Philip Morris at $281 USD with a dividend yield of 5.1%. So that's pretty much it for the dividends, guys, my top payers. So if we go here, I've got Philip Morris, that's 1, Stag 2, Main Street Capital 3, AGNC 4, VYM 5, AT&T 6, EPD is 7, O Realty is 8, Prospect Capital is 9, SPHD is 10, Exxon Mobil 11. So they're my top dividend payers, guys, and obviously with my entire portfolio I can scroll through and show you every single dividend, but there's too many. But they're my top 11 dividend paying stocks, guys. And let's just go quickly to Stake while I'm here. And you can see here what I mean by passive income, guys, and it may be a tiny amount, and this is what a lot of people don't really care about in terms of they say, oh, you're a dividend investor, it pays you peanuts, but this stuff compounds over time. And it's really cool to see it growing, because every time you reinvest those dividends you get more dividends back in payments. So on the 29th of April I received 48 cents from GPS, and by the way, I'm an Australian citizen, so we get taxed 15% by the US government, which is annoying, but anyway, that's just what happens. BNS, I got paid 34 cents, and CSCO dividend of 11 cents. So you can see here, guys, dividends come in every single day almost in investing, guys, in dividend stocks, and there's just a heap of them, and this grows every single month. And with those reinvested dividends, this is why I can't see why people don't start early in dividend investing, guys, because the earlier you start, the more time you have in the market, the more time you will have to compound your dividend investments. So let's go to my dividend tracker. And the total dividends that I receive every single year is $943.27 a year. The monthly dividends are $78 a month and 61 cents. And the daily, so I earn $2.58 a day, and the average yield is 4.47%. So it's in a good range. It's not too high and it's not too low. So it's good for me at my age. You know, I need to start looking at sort of the higher end dividend yields, just because I need those dividends to come in a lot quicker and a lot higher, just because my portfolio started only 2.5 years ago. So I need to start getting moving with this a lot quicker. And you can see my dividend payments today that I will receive in probably 2 days, because once the dividends are announced by a company that they're going to be paid, they are paid out into your investment account 2 days later. So you can see gain 90 cents, JP Morgan 13 cents, Land 12 cents, LTC Properties, which is a REIT, 6 cents, MO, which is Ultra Group, $1.69, OXSQ is like an index sort of fund for tech companies, is 28 cents, PGX 8 cents, QQQ, sorry, is the index fund for the NASDAQ. So you're investing in all technology like Facebook, Google, Microsoft, that kind of thing. That's paying me 12 cents. And again, as I mentioned, SPHD is a really good dividend payer, $9.22. And that is because it's the 30th. It's the end of the month. So I get $9.22 in the next 2 days. That'll be in my account, I believe, on Monday, which is awesome. And you've got here top 3 dividend payers again, Exxon Mobil, SPHD, and Prospect Capital. I've got a little goal here of $3,000 a year in dividend income, so that would be incredible to get that. And I will reach that by the end of this year. But as mentioned, the cryptos have gotten a hold of me, and I've been all over the place. So back onto the dividends, guys. This is very important. 30.16% of my dividends come from energies, minerals companies, and dividends receivable this month is $71.30. Now think about that for a moment, because it's $70 a month. May not seem like a lot, but you know, like Netflix charges you $10 a month, Stan charges you $10 a month. You know, you may have a bill that comes up and then you may need some money that you don't have. Dividends would pay that, if you know, whatever situation you may be in. So this is the reason why I love dividend investing. And my portfolio is sitting at 27,309 Australian dollars, guys. That is insane. And I've had a total return of $6,222 in the last 12 months, 29% return. You can't get that in banks or any other investment. Yes, you can get it in cryptos, but I tell you, you got to stay in cryptos and you've got to have things of steel. I won't say the word, but you've got to have things of steel for cryptos, guys, because I tell you, it's very volatile. And you just see your money go in and out all the time. But with dividends, guys, it stays consistent. And if the stock price fluctuates, I'm not concerned about that, because I'm looking for that dividend getting paid every single month or quarter, if not annually. So we'll see what happens. And guys, if you scroll right down to the bottom of this app, and by the way, I'm not an affiliate for this app at all. I just use it because it's really cool and easy. It's in my pocket and I can access this information at any time. After 10 years, my portfolio would be worth $45,000 AUD. If I didn't reinvest any more money into this, it would generate me $3,263 a year in 10 years, guys. This is what I mean by compounding. And Warren Buffett only gained the majority of his wealth later on in life, to the point where I think it was like late 50s or early 60s. That's when he started seeing the benefit of his dividend investing, guys. So really, really cool stuff. And in 20 years, guys, this is insane. Portfolio is going to be worth $150,000 and it will generate me $18,820 a year. Now let's put that into perspective, guys. $18,820 a year, divide that by 52, which is obviously 52 weeks. It's going to bring in $361 a week. Now that would seriously help with either a mortgage payment, food, groceries, bills, whatever it may be, guys. And that's the reason why I love it. And you can see, guys, this is the June. That's too much. Let's go to April. Today is going to be 8 dividends going to be paid out from 8 different companies. So that's pretty much it, guys. This is a really cool, different form of investing, and I hope you guys maybe learn something, pick something up. But as mentioned, guys, I'm not a financial advisor. Do your own research into every kind of investment. Make sure you're very careful. And guys, I do these for pure enjoyment and to document my journey. And I hope you guys learned something today. But yeah, guys, so dividend investing, that's the basics of dividend investing, guys. And I hope you guys stay safe, happy investing, and let's see how these cryptos go in the next couple of days, because I'm fascinated by them, guys. They're unbelievable. All right, stay safe, have a great weekend, take care, and thank you, guys. If you're new, make sure you like the video and subscribe to the channel. All right, peace, bye.